How's everybody doing? I bought a new lens this week that I was excited about, so if you're gonna just have to deal with a close-up of my mug, which I apologize for, probably go back to the next one next time. If you watched my video last week, it was kind of poking fun at myself with the mean comments I've received over the years. I had a lot of fun, and a lot of you said some nice things, so thank you very much. I mentioned that I was going to go on a bit of a rant against the banks this week, and that is what I'm going to do, but I'm going to try and keep it tame because, truth be told, I just cannot stand the banks, financial institutions, credit card companies, because I know how they operate. So there are just so many things that upset me about the way that they operate that I could honestly go on and have a conversation about it for hours, and I still wouldn't even say all of the things that I'd like to say. Not that I would say that much stuff in that amount of time anyways, but I digress. So I'm going to talk a little bit about the things that I really don't like about the banks right now, and just some things that you should think about if you're dealing with them. You've probably seen some of these things. And then I want to talk about what I want you to watch for moving forward as we come out of COVID-19 and this pandemic, to see how they actually respond, because I'm very interested to watch this myself. Um, Now, when I say that I don't like banks and financial institutions, that in no way means that I don't like people that work in these institutions. And I know that people that work for them sort of get frustrated and they're like, well, my company has a bad rap, so I have a bad rap. That shouldn't be the case. There are really good people that work for all of these institutions that are doing what they can for their customers, the right things with the products that they have. But there are also people that take advantage of people, and that's in any industry. So it's more about the person. Today, I am not going against people. I never really am. I'm talking about the big money, the huge corporations that have changed over the years. And one of my biggest issues, being like a tiny little financial planning company that's pretty independent, but I can't be completely independent of all financial institutions, is the amount of trust that the average Canadian has in their bank. And I understand that over the years, what has happened is, initially when banks started, they were great. They did everything that they needed to do really well. They kept your money safe. They gave you some options, all of these things. But over time, what I've just seen as far as the trend is that they're more interested in making as much money as they can off of each customer that they have, who becomes more of a number to them than an actual customer and client, so that their shareholders can actually make more money. And that's basically the bottom line, is how do we make as much money as possible no matter what? And that's what I'm going to talk about today, and just things that I know that happen, that I'm sure they've tried to sell you, and why you shouldn't be doing them. And then I'll talk about, what to look for coming out, to see if you now do believe that they still have your best interest at heart. Then let's see what happens when they come out of this, because they do have a good opportunity to do right by the people that keep them in business. So one thing that they always love to sell, Obviously, is every time that you open up some sort of debt instrument with them, a credit card, a line of credit, a loan, a mortgage, they're always trying to sell you creditor insurance so that if something happens to you, that loan will be paid off. It's quite expensive. It's not sold by a licensed insurance agent, and the only beneficiary of this insurance is actually the lender, whereas they should actually be telling you, go and buy actual life insurance or actual disability insurance or actual critical illness insurance that protects you and your family for about the same cost, maybe even less expensive. But they don't do this because then they have to go outside of the branch and use an actual licensed insurance agent to sell you that. Which gets me to the next thing, which just drives me absolutely bananas, is everything that they're focused on is to put you into further debt. Every single thing that they do is about them being able to lend you more money than you should ever borrow. And in December, before all of this happened, one night I wrote this blog that said, "Why are banks the enemy?" And I went on this really long, crazy rant about how mad I was at the banks for always putting Canadians in this very difficult financial position by allowing them to borrow more money than they could ever afford to pay off. You see people that have these giant houses or all of these nice things and all of these nice cars, but what you don't realize is that they're always on the brink of disaster because they have borrowed so much money to look like they actually have good money, because the bank's whole job is to make all of us feel like we should be able to have more and be able to borrow more. And one of my favorite stories of all time was one day I got a call from my bank and they said, "You know what, Kent, you've been automatically approved to get a $5,000 extra limit added onto your credit card balance or limit. And I don't owe anything on my credit card, but I do have a balance on my line of credit that has an interest rate of, say, 6% compared to my credit card that has a limit of, or a credit or an interest rate of 20%. And I said, "Well, no, I don't want that on my credit card, but I'll take that extra limit on my line of credit because I wouldn't mind having that extra room on there just in case." And I said that because I knew exactly what they were going to say. And then this person says to me, "Well, sir, actually, that's too risky for you. So we can't give you extra credit on your line of credit that has a lower interest rate because it's too risky for me. And it's less risky somehow for me to have to owe a potentially $5,000 more at 20% interest." It's just mind-boggling that they can get away with these things. I've seen credit cards for people that have credit card limits that are the size of their annual income. This means they will never ever get paid off, but somehow they were approved for a credit card limit that exceeds what they make in a year, and it would be fully maxed out. And it's just absolutely infuriating. Drives me absolutely crazy. But this is all that they're doing all the time, is finding each level to let you borrow more. So you've got your house, you pay off some equity, it goes up in value. Borrow more because it's super cheap. Now go out and get a car loan that you shouldn't be able to afford. Now do this. Now you've got a credit card. And the reason that they can lend out so much money is so fun, because what they do is they'll walk in and they'll say, "You have 2 quotas as a banker today. We want you to set up as many credit cards and lines of credit and loans as you can, but we also want you to sell GICs." And the reason that they want you to sell GICs is because every time that they take your money and say, we're going to guarantee you a 1% interest rate for a year or a 1.5% interest rate for 5 years, then they can go ahead and borrow 3 to 5 times as much money as you've basically lent them for that period of time, and that allows them to lend out more money. So they're locking you into this terrible investment that you probably shouldn't be in, just so they can make a ton more money actually lending out your money. Whereas a financial advisor's job at a big financial planning firm that isn't into lending, one thing that they would definitely have above the bank advisors is that their goal is to make sure you have actually more assets, where the bank advisor's goal is to make sure that you still have a whole bunch of liabilities. So would you rather be working with somebody that wants you to have more money, or would you rather be working with somebody that wants you to have more borrowed? So that's something to think about. Not that I think that financial planning institutions are all super great and nice and everything, because I definitely don't. But we'll go back to the GICs. And what I love about the GICs is, so you've sat down with this bank advisor that is like, you really want this GIC because if I get you into a 1-year GIC, then you're going to get a guaranteed 1% rate of return that is fully taxable. And that's absolutely fantastic because it says the word guaranteed on it. Now, how come when you walk in, that advisor isn't saying, you know what you probably should do is take this $20,000 if you want income from it and buy our shares in our bank, because the shares in our bank have been paying a 4.5% dividend for the past 10 years every single year, and it's not taxed nearly as much as the income from a GIC. So you're making 4.5 times as much money, and you're not paying as much tax on the actual income. How come they're not telling you to do that, but they're actually telling you to buy these GICs? So it's a question that I have. I know why. I just told you why, but I mean, we've obviously all dealt with the high banking fees, and you're like, what the hell is that? Another $15, or I got to make sure I have $2,000 in there, or every time I go to a bank machine, I'm being charged $3 if it's not at my bank. They're just making money hand over fist, taking advantage of Canadians and putting us all into this very similar situation where now, when shit hit the fan with the coronavirus, it's all going to come back and bite every single one of us so hard. And that's why it's so important right now, is because it wasn't us or the government or the millennials or the boomers or anybody that did this to us. It was the actual banking system set up to make us fail by allowing us to spend way more money than we should. So that is what has driven us to this almost economic collapse, like within days of us actually shutting down the economy. So we'll see what happens. Now, what have the banks actually done since this started? So we're paying their bills, the big five, every day, paying all these fees. They're making money in interest. They're making money in bank fees. They're making money in investment fees. They're making money doing every single thing. And the only thing that I can actually think of that they kind of did that was nice is they said, if you are in real economic hardship, we will cut your interest rate down on your Visa or your credit card, your MasterCard, from 20% to 11%. Wow. So we've had the lowest interest rates we've ever had in history for more than a decade. Visas, credit card companies went up to 20% in the 80s because that's how high interest rates were. And then they said, you know what? we're not ever going back in line with what reality is. We're just going to keep charging our customers this much and have no rules about how much money we can lend to anybody. And that's how we're going to stick to it. And then we're in the worst economic potential collapse, the craziest thing that's happened in anybody's life that's alive, unless you're alive, in World War II. And they're like, you know what? If you're in real trouble, we'll drop your interest rate down to a really reasonable 11%. That's absolute horse shit. But anyways, they've given out these small business loans. Yes, they were easy to get, but that was our money. Our money. The government made them do these things. That was our taxpayer money that is basically supporting all of those small business loans that are supposed to have a 0% interest rate for the next 2 or 3 years. But when I look at the hidden charges in mine, they add up to approximately 3 to 3.5% in other administrative charges over the course of those 3 years, which is fine. It's still a really low interest rate, but it's definitely not zero. So they're still making money off of those, and they've allowed people to defer their mortgage payments, but that hasn't actually cost them a dime, other than the fact that they're going to not be paid as much this month, but they'll get more next month and the month after, and so on and so forth. So it's not actually hurting their long-term bottom line. So basically, they put us into this situation, as far as I'm concerned, economically, people that are in a lot of financial hardship. It isn't your fault. The system was built for you to fail. I don't blame you. I know how hard it is. Don't blame yourself. A lot of people are in the same position, and it's really bad out there. And I hope that these big money people actually come to try and help once we start seeing what the real damage is coming out of this. And what I really want you to watch for is something that I know is going to happen. And when I started this company, I had this idea that I kind of knew that the industry was going to go the way of sort of a hybrid model of online and, in person, because we still need that personal relationship, I think, with your financial planner. So I saw it coming, and I knew by doing that, by cutting all of my overhead down as low as I possibly could, not all of a sudden going out and renting some office in some high rise to make myself look like I was all hoity-toity and fancy, was to keep my overhead as low as possible so that I can pass that on to my clients. And now what the banks are about to do, what they have learned to do in the last 2 months, is run on a system that I've been running on for the last 3.5 years. And as far as I've heard and read in a few articles, the plan is to continue to sort of work that way for the majority of their services, which means that their overhead is going to be substantially lower. So I want you to watch and see if they decide if they're going to pass these savings down to the consumers, the clients, or if they're just going to increase their profit margins because they had a tough year and they just want to make more money for their shareholders. So I'm sorry for the long rant. I hope you guys are doing okay, as always, and we'll get back to learning, I guess, next week. Thanks for watching. Please subscribe if you haven't.